Hello and welcome to IG's Trading the Markets podcast. I'm Victoria Scholar, and this week we're here to talk about one of the major changes that's taken place since the start of the pandemic, and that's the transition from bricks to clicks. According to the latest report from the Mastercard Economics Institute, consumers around the world spent $900 billion more on online retail in 2020 versus the prior 2 years, with 20 to 30% of that expected to remain this year and beyond. With me to discuss all of this is Jane Edmondson. She's the co-founder and CEO at EQM Indexes. Great to chat to you, Jane. Now, I know you've recently launched a new ETF called iBuy with Han ETF. This tracks the online e-commerce market. It's been an incredible year for the sector. Talk to us about the shifts you've seen over the last 12 months.
Thank you, Victoria. Yes, well, certainly this was a trend that was already in place prior to the pandemic, but the pandemic environment has obviously forced a lot of people to be shopping online. And as a result, the trend has really just accelerated in the last year. In fact, IBM did this great study that said that the pandemic environment has probably accelerated this trend by about 5 years. So, there's new people that are shopping online that have never shopped before. Obviously, there's new types of online services that people have been embracing. Things like online grocery has become very popular now. That wasn't really a big trend before. Things like curbside delivery is another trend where people order online and then pick things up at the curbside at their favorite retailer. So these are all things that are in place now. There's new shopping categories and new shoppers, and these are not trends that are going to go away post the pandemic. So it's created a very exciting investment opportunity. I guess it's one of the sort of the silver linings of the pandemic.
Yeah, I mean, as you sort of alluded to there, online retail is a very broad brush term encompassing so many different sectors, whether that's groceries or electronics, clothes, food delivery. What are some of the areas that you're really excited about in terms of potential growth beyond the pandemic?
Well, one interesting category is online fitness. So one of the companies that's been highly successful in this environment has been Peloton, which is one of the top 5 holdings in the ETF. A lot of people didn't want to go to the gym, so they've been doing their fitness routines at home, and they've been a huge beneficiary. Another interesting beneficiary of the pandemic as well has been Etsy. So, Etsy is a website where people, sell their sort of do-it-yourself crafts to other people. And the top category on the Etsy site in 2020 was the mask category. So people were creating, attractive sort of designer masks to get them through the pandemic. So those are some new categories that I think have been bolstered. But as you mentioned, a lot of these categories were already in place. So, food delivery, I think, obviously a lot of people have been going through HelloFresh or doing Delivery Hero, or in the US, DoorDash. So those are, trends that have been accelerated. But what we're trying to do is we're looking for companies that have at least 60% of their revenues derived from online retail and online marketplace. So we're really looking for the pure play companies in the space. So, a company like Walmart, for example, wouldn't qualify because only 7% of their sales are online, even though, that's certainly an area that they're trying to ramp up. So these are the pure play names in online retail and online marketplace. And then the other thing is we're trying to tilt on the fastest growing names. So the companies that have the best year-over-year revenue growth as well, to get sort of the growthiest names in online retail.
So your index is up by around 188% over the last year. I guess some investors might be thinking, why should I get involved in e-commerce right now? Obviously, the performance during the pandemic has been incredible, but we are now seeing things start to reopen. So is this the right moment?
Yeah, I think that's a good question. Pretty much as it was trading all the way up, people were asking that same question. And I think that we're still very early days, believe it or not, in online retail. When we first started investing in this area, 5 years ago, online retail maybe represented about 9 or 10% of total retail sales. Today, that number is over 20%, in part due to the kind of the spike due to the pandemic. But that's kind of the level where it's going to be going forward. And, even traditional brick and mortar retailers recognize that, you have to have an e-commerce presence, that consumers demand it. They want rapid delivery, they want competitive pricing, better selection, all the things that online retail offers. So, this is a trend that's, going to perpetuate beyond the pandemic. Brick and mortar retailers are going to be adopting it as well. So I think that this is a theme that, from a long-term perspective, will be a good one going forward for many years to come.
On that note, I mean, I know you've said the mall isn't dead, it's just moved online, which I thought was a great quote. I totally understand and see the case for this long-term shift to online. It seems that we do everything via our smartphones these days. Do you
Yes.
think that those traditional bricks and mortar shops and that style of consumerism will still continue to have a place?
Yes, and I think that there's a kind of a new form of retail that will emerge, something called omnichannel. Retailers will probably have much smaller footprints, so the big box store format, I don't think that that's going to be as popular. And actual retail stores will become almost like showrooms. Peloton has adopted that model. You can actually go to a Peloton store and see the bike, but you don't actually purchase it there. So I think that that business model will perpetuate, and it's good for the retailers as well because they don't have to pay the high rents for large square footage. And people really want to just purchase the products online anyway. And with rapid delivery, they can go to the store, see what they want, and it will be there in a matter of days anyway.
So, how does mobile penetration and new technology advancements play into this theme? There's so many things out there, whether it's AI, chatbots, augmented reality, voice assisted shopping, so many different sort of sub themes within this e-commerce theme. How does that contribute to the potential performance of your ETF?
Yes, well, I mean, I think you're right, Victoria. I mean, mobile purchases have become a huge story. Back in when we started again investing in this area, people really didn't make large purchases on their phones. Now, with all the the payment innovation, it's not unusual to be sitting on your phone and ordering even furniture. So that's been a big transition, and there are a lot of interesting technologies that have come about, from artificial intelligence, where you can actually picture the products in your own home, to as you mentioned, chatbot customer service. So all of these things, it's really been driven by the consumer because they want this kind of experience. And for areas like apparel, where you can't necessarily try on clothes online, I think in the future there's going to be sort of artificial intelligence where they can determine what your size is and make that whole process very seamless. And I think post the pandemic too, people, I don't know that they're going to be rushing to the stores. I mean, I think there's other things that people would like to do, from going to concerts to traveling. So shopping, in some sense, for a lot of people, I think has become mundane, and maybe people will find other experiences that they prefer to do rather than just head to the shopping mall.
Yeah, so I know in terms of your investment criteria as well, you were saying that as well as having a large percentage of its sales coming from online, you're also looking for high growth potential. Does that rule out a sort of subsector like electronics, for example, which already had a large proportion of overall online sales before the pandemic, and so perhaps point to a smaller growth potential?
No, I mean, we're really looking for the sort of the trendsetters in online retail. So, so some of the companies that screen well on revenue would be, like Peloton, which I mentioned, and Wayfair is another one that's been a very popular one in the home category, for furnishings. So we really want the fastest growing companies, because those are really the trendsetters in the industry. And surprisingly, a company like Amazon, which everybody recognizes as kind of a behemoth in online retail, they're almost too big to grow as fast as they have previously. So this way we're kind of getting some of the emerging players that are going to be kind of the next Amazons in the next decade.
And I was wondering what your thoughts were on Deliveroo and its IPO last week. There was so much talk around it, but when it
Yes.
actually came to market, it was a massive disappointment. Why do you think investors decided that they were going to shun this stock?
Yeah, it was kind of a massive disappointment. I think it really had to do with the, company itself. It had issues from, worker safety and worker treatment issues to the balance sheets and the financials. So, I don't think you can paint a broad brush and say that all, delivery services are bad, but that particular company obviously had some issues, and that's why it wasn't well received by the marketplace. But certainly the delivery of restaurant meals is still a very viable business. We have a company in the U.S. called DoorDash that's very similar, and that's a trend that will continue also post the pandemic, where people are used to now just almost having room service to their house and getting meals delivered to them from restaurants. And that's during the pandemic, I think that those delivery services were really a lifeline to a lot of restaurants, allowing them to stay in business.
Yeah, and just very finally, taking a look through the list of securities within your ETF, I see region-wise, there's a lot of stocks that are based in North America, but you've also got stocks in Europe and in Asia. Are you seeing any patterns in terms of geographies as to where you're finding growth in e-commerce really is taking hold?
Yes, absolutely. I mean, this really is a global index and portfolio. And interestingly enough, some of the emerging market economies are where the fastest growth is. So in the last year, the fastest growing country for online retail was actually Argentina and Latin America. And that's because, prior to the pandemic, people in Argentina and Brazil really didn't shop online very much, and they didn't have the payment structure to support it. So Argentina grew 70% last year, year over year, in the online retail category. So, and we're seeing very high rates of growth also in some of the other emerging market economies, like China, for example. They have an app called WeChat, where they can buy things on their phones, and everything from insurance to they do even online dating on their phones. And there's a lot of social commerce that occurs in the Chinese market as well. So they're almost like a trendsetter from that perspective. So this is really a global trend. There's opportunities all around the world, from the developed markets and emerging markets. And I think we're starting to see a lot of more cross-border commerce as well, where people in the UK can order things from China, and people in China can order stuff from the United States. So it really is sort of a global ecosystem.
All right, Jane, it's been great chatting to you. Sadly, we have run out of time today.
Oh, it's been a pleasure, Victoria. Thank you so much for your time.
Thank you so much, my wonderful guest, Jane Edmondson. She's the co-founder and CEO at EQM Indexes. And thank you for listening to this episode of IG's Trading the Markets podcast. And if you enjoyed today's episode, don't forget to subscribe. For more videos like these, make sure to follow us on Twitter. We're at IGCom, and you can subscribe to our YouTube channel, IG UK.